Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, April 13th, 2020, and we again find ourselves in the final hour of the trading day. I mention this each day, but I think it's worth repeating. I think that the most valid time, in my opinion, to make the best buying and selling decisions is right at the end of the day, in the last hour, particularly in the last few minutes. That's when the large financial institutions take over the pricing from the day traders and the algorithms. During the day traders and algorithms, they are controlling the pricing. At the end of the day, the large financial institutions, they come in, they're dealing with the most money, they have very smart people, they're dealing with the best technology and research, and they come in and take control away and move the price to what, in my opinion, is the most valid price of the day to make your buying and selling decisions from. Plus, it frees up time. You don't have to sit in front of your computer all day, and you can just wait till the end of the day to make your decisions. So there's that going for it as well. So anyway, thank you so much for coming, everybody. It's always nice to have everybody here. I honestly do look forward to this time of day every day. I think we have a great group, really good input, good comments, and just a great group. So I'm glad we have this community. So thank you for coming. So Dan is here. Hey, Dan, good to see you. Always nice to see Dan. Hope you're having a good day. Christopher is here. Hey, Chris, good to see you, sir. Appreciate you coming back. Nice to see you. Bob is here. Hey, Bob, good to see you as well. Happy Easter and all. Yep, happy Easter to you. Hope you had a good weekend. Hope Bob had a good weekend. So, all right. Well, we're having kind of an interesting day today. The Dow Jones is down 436 points, down 1.84%. The NASDAQ is only down 23 points, only down about a third of a percent, a little less than a third of a percent. And the S&P is down 43 points, 44 points, down about 1.5%. So the Dow is taking the worst of it today, and the NASDAQ is having the best of it today. So, all right. Let's take a look. Hey, Dirk is here. Hey, Dirk, good to see you. Hello, all back after a while. We're always glad to have you back, Dirk. Good to see you. Hey, Zach, nice to see you, bud. Always nice to have Zach here. And hey, Kamal is here. Good to see you, Kamal. It says, hey, Greg and everyone. Hey, David. Hey, Greg and all. Hey, David. Hey, by the way, David, you asked me last week about when I was going to start increasing my position size based on volatility. And, it got me thinking. So I made a video this weekend, and I posted it on YouTube. And here, let me share it right here. But what I wanted to do, there's a formula that you can use based upon ATR channels that will give you a precise formula of when to decrease your position size and when to increase it. And generally, I just look at the ATR channels, and when they start to narrow, I know that the volatility is starting to decline, so I can increase my position size. And when they start to increase, I know I have to decrease my position size. But anyway, I did this video just for David, and I'm going to put it in the chat right there, but it's about using ATR channels and a formula that you can use to increase your position size when volatility is starting to contract, and increase and decrease your position size when volatility is ready to expand. And it's a pretty good formula, actually. It takes a lot of things into consideration, and it's very black and white, and it tells you exactly each day. It changes every single day based upon the volatility and the ATR, the average of the ATR channels. So anyway, if you have some time, David, check that out. Michael is here. Hello, first time here. Hi, Greg. Hello. Nice to see you, Michael. Appreciate you coming. Great video of the weekend. I learned a lot. Oh, okay. You've already seen it. Hey, Steve Burns. Good to see you, my friend. Appreciate you being here. Always an honor. Always a privilege to have the great Steve Burns here with us today. And I really mean that, being able to, maybe ask Steve a question or hang out. It's just great. So I really appreciate Steve being here. Steve says, hey, Greg, Amazon worked out for me today. Yes, it did. In a big way. And I have all your positions here that I'm going to go over, and there's some really good positions. So I'll get to that in just a little bit. But thank you so much for coming, Steve. Bastian, hey, good to see you. Appreciate you coming back. Miko25, hey, good to see you. And look forward to our lesson on Thursday. Mount Doji is here. Hey, Mount Doji. Appreciate you being here. Marco is here. Hey, Marco. Frank, salut to a great group. Salut to Frank. 100%. It is a great group. Christopher says, nice move on Amazon, Steve. Yes, it 100% was. That is a monster today. So we're going to be looking at that. So, all right, well, here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions. We're going to talk about when I bought them, why I bought them, how I'm going to manage them moving forward. After that, as I just mentioned, we are going to, a few of you have been kind enough to share your trades with the group, and so we're going to go through those, take a look at those, see how they're doing. After that, we're going to do a few minutes on trader psychology. I also mention this each day, but in my opinion, it's very important to learn how to trade. Obviously, it's important to look at and identify support, resistance levels, entries, exits, learn how to use indicators, put together a trading plan. But putting together a trading plan and following it are two different things. They're two different worlds. And so, we want to practice and get good at our technicals, but we also have to practice on ourselves as far as being able to follow our plan. So I do like to talk about trader psychology. So I am going to talk about that. After that, we're going to go down through my watch list one by one, see if there's any potential trades for me at the end of the day. I have 3 requirements before I enter any trade. Requirement number 1, have to have a good confluence or combination of signals. I look at each indicator as a potential group of buyers, and you'll have a much better chance and increase your odds dramatically to have a winning trade if you are in the company with as many other buyers as possible. So I look at a confluence of indicators coming in like RSI or MACD or moving average. I look at those indicators as essentially groups of buyers. So I want to be in the company with as many other groups of buyers as possible. So that's why I look for a confluence. Step number 2, you have to make sure you have a good risk to reward based upon your filters and based upon what you consider overvalued or undervalued or overbought or oversold, right? I mean, that's a subjective term, what's overbought and oversold. But, part of your plan, you have to have filters. Sometimes they're going to work for you, sometimes they're not, but you do have to have them in place. And if they're, if they're extended above what your approach tells you, then you just have to let them go, right? And that's how it goes. Sometimes it works out, sometimes it doesn't. So good risk to reward ratio, at least 2 to 1. Step number 3, make sure you do not have too many correlated positions or too much account heat. I never take on more than 60% account heat, meaning that I'll never put more than 60% of my capital at risk at any one time. And ideally, it's good to have diversifications in the type of stocks you own and even outside of stocks like oil or gold or bonds or silver or something like that. Just as much diversification as you can. So I'll go down through the list, see if something qualifies. If it does, I'll place a trade right near the close of the day. After the market closes, if anybody has any questions, please let me know. I'm happy to answer them for you. If you need any clarification on anything I discuss, please let me know. I'm happy to do that. If you'd like me to take a look at any stock symbols, please let me know. I'm happy to give you my humble opinion. And if you would like me to take a look at a stock before the market closes and you think it would be helpful for you or for the group to get my opinion on it, I'm very happy to give you my opinion. And all I ask is that you put a star by it so that I know it's time sensitive, so I can do my very best to get to it before the close of the day. So that's the plan for today. So if you could be so kind, hold on. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Miko says, I have also watched the new video. Very helpful. Oh, I'm glad to hear that. Yeah, I'm glad I did that video. Well, I'll get into a little bit later why I did it. But Steve Burns says, thanks, Christopher. Christopher says, salute to great poetry, Frank. Frank says, thanks. Well done on those on those trades, Steve's. 100%. Really nice trades. All right. Well, speaking of trades, let's take a look. So first on deck is Apple. I did buy a long-term call on Apple expiring June of 2021. I bought it essentially here in this weekly bar when we had this big V1 rejection of the 100, rejection of the third ATR channel. I bought $250 Apple calls. Right now we're at $269. 55. So these have worked out really well. They're nicely in the money. My stop will be on these long-term calls. If we get a close below the halfway of this washout bar, my profit target will be the 1 ATR channel on the weekly. If it goes and holds above, I will keep it as long as it goes. But if it rejects the 1 ATR channel, that will be my time to take profit on these calls. But anyway, so far, really good. They're almost 20 bucks in the money there. So glad I took those calls. All right. Gold. I did buy gold back here on March 26th. I bought it when we had a 520 crossover. This is a good long-term trading approach, trend trading approach to gold. Doesn't always work, but it creates a nice trade construct where if you're wrong, you can be wrong a small amount, and it usually gets you out fairly quickly. And if you're right, you can kind of ride the momentum of a big wave. So I did get in here at 153.30. My rules had me get out of half my position when the price closed below both the 5 and the 20, but I kept the other half position to wait for a 520 mechanical crossover. And so anyway, I did have to get out of half here for a loss, but I'm glad that I followed that rule there, and this has been a really nice move so far. Got out of one profit target today at 160.56, and I'm very close to that second profit target, 162.43. So need a 23 cents more to the upside and hit that second profit. So anyway, so far so good on gold. Google. Well, Google's not responding so well. I did take the 520 crossover on Google back here on the 8th of April at 1206.49. My stop to the downside would be if the price closes below both the 5 and the 20 for half. And then the second half would be if the 25 actually closed underneath the 20. Excuse me. I'm losing my voice there. To the upside, 70 RSI is my ultimate profit target. I'll have to see if it goes up, how it reacts around the 200. If it rejects the 200 to the upside, I may just go ahead and pull the trigger there. But anyway, slightly down on this trade. And then SPY. All right, world famous SPY trade from Lizanne Saunders at Bespoke Invest on Twitter. This back test is from 1993. I do buy the SPY every day at the close. I hold it overnight and I sell it first thing the next morning. So in this back test, two approaches. Approach number one, buy the SPY at the open, hold it through the day, sell at the close. If you use this approach every day since 1993, you'd have returned a negative 13.9% return. However, if you did the opposite, which is what I do, buy the SPY at the close, hold it overnight, take the risk of holding it overnight, selling it first thing the next morning, the results are 634.2% return. So big difference. Now, I've been using this since 2019. 2019 was a fantastic year for this approach. 2020, not so great, but better recently. So past performance is no guarantee of future results, that's for sure. But if I'm going to allocate capital towards something, I'd rather allocate it towards something that has a good risk to reward, that has a good back-tested results compared to this line, which, well, this is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. But you can see the buy in the afternoon, sell in the next morning has far outperformed the previous. So anyway, that being said, I did buy S&P on Friday at 278.20, and I sold it this morning for 276.90 for a small loss. But this has been a roller coaster using this approach this year. This was just brutal down here, but I'm glad I've stuck with it because have made back significant amount of losses, but not positive on the year using this approach yet. But anyway, I will be buying this again today at the end, at the close of the market. Steve says the great GLD trade, Greg. The big whipsaw knocked me out. Yeah, I know. Well, I'll tell you, I have, with crossovers, I've looked at crossovers so many different ways, and what I ultimately came up with, at least for my personality, doesn't mean for everyone, but at least for my personality, is I was always struggling between getting out with the close below the 5 and the 20 or whatever crossover it was, or holding on the mechanical, and I kind of like to split things 50-50, so it made sense for me to just split it 50-50. Okay, Bing He has been in Clorox for a nice trade here. He bought it at 175 back on the 27th of March at 175.05. It's been a nice trade for him. Just kind of sidewards with an upward drift. He's having a good day today. So congratulations, Bing He. All right, let's get to Steve's trades. Okay, so Steve bought the Qs, the 520 crossover. He bought it here at 196.30, and it's moved up every day since then. So right now he bought it at 196.30. It's 201.53. So great trade on that, Steve. I imagine his initial stop will be a 5 crossing under the 20 or a rejection of the 70 RSI. All right, let's go to Alibaba. Okay, same thing on Alibaba. He bought the 520 crossover here at 197.80. Next couple days it went down, and then today it has rallied up nicely. So he is now in the money on that, and I believe his trade plan on this is the same, waiting for a rejection of the 70 RSI or a 520 cross under. All right, IBB. So this is a crossover as well. Different. This is a 530, not a 520, but a 530. Bought this back on the 7th of April, right here about 109.70, and it just took off ever since then and what's up 113.89 correctly. So I believe his trade plan is the same for that one. Monster. Oops. Okay, here's Monster. So Steve also bought Monster here at 60.20 approximately back on the 8th of April. Went up the next day, used the 520 crossover, went up the next day, rejected the 200-day moving average, and then down a little bit today, down 2.26%. Now, here's the big trade of the day. Let's see if I can find it. Amazon. So Steve took the 550, am I right on that? 550 SMA crossover here, 244 back on the 8th. And just moved sideways Friday or Thursday, didn't do much. And today has had a monster day, up 6.34% on some news that Amazon's hiring more people. So getting close to that 70 RSI, I imagine Steve's initial profit target on this would be the 70 RSI. And if it held above it, I'm sure he would hold it. If it rejected it, he would probably get out there. And then last but not least is Goldman Sachs. Steve bought the 520 crossover there at 176.90, and it has moved up really nice on Thursday. Back down a little bit today, down about 1% today. But all those trades seem to be profitable, I think, except for Monster. So congratulations. Oh, I missed one. I missed AGQ, which is double leverage silver. So he bought this, I think, 21.20 with the 520 crossover. Had a huge day on Thursday. Reversed back down today. Reversed back down a little bit, but still nicely in the profit. Sold off pretty strongly this morning and has reversed. So congratulations, Steve. Fantastic trading, my friend. 550 SMA cross. Yes. Okay. All right. So let's take a look here. Bob says, Greg, did you change your one ATR to simple? You know, Bob, my ATRs have always been simple. I know on some platforms you're restricted to EMAs. That's what I've noticed. But on my platform, I can use simple, and so I've always used simple. All right, so that's it. So all in all, everything pretty good today. The only real stinker essentially was Google, and it's not down too much, and the little overnight SPY trade, which was down a little bit. So anyway, all in all, pretty good day. All right. Okay. So listen, before we go down through my watch list, before I look for an end of the day candidate, and like I said, 3 things we need to look for: confluence or combination of indicators lining up. Number 2, good risk to reward, at least 2 to 1. And number 3, make sure they're not correlated positions. Make sure you do not have too much account heat. But before we do that, I do like to talk about trader psychology. I think it's important. It's a very important part, very important skill as a trader. And there's some really good Facebook and Twitter channels out there that post good words of wisdom every day about, you know, trading techniques or trading in general or trading psychology. And I saw this today. This is from Kenzie on Twitter at Kenzie Klein 10X. And I saw this and it really kind of stuck out to me because you know, we all have mistakes and we all fail at different things, but I saw this and I thought it would be helpful for the group. But Kenzie says, or actually this is from Robert Kiyosaki, success is a poor teacher. We learn the most about ourselves when we fail. So don't be afraid of failing. Failure is part of the process of success. You cannot have success without failure. And it's so true. You know, whenever I've gotten into issues in all my years of trading, it's been when I've had a lot of success and I maybe got a little lazy or maybe didn't follow my plan exactly. And then when you start to lose and when you start to fail, boy, do you, at least in regards to trading, boy, do you tighten it up, right? You tighten it up, you get right back to exactly following your plan. And that's usually what gets you back in the game. So, you know, everybody's going to fail at some things. Just learn from it. Move forward with it, learn from it, internalize it, and don't make that mistake again. But one more time, success is a poor teacher. We learn the most about ourselves when we fail. So don't be afraid of failing. Failing is part of the process of success. You cannot have success without failure. So if you're running into failure in your trading, it's just part of it. Learn from it. You know, take what you've learned going into the future. Don't make those same mistakes. And I don't think you're going to fail as much, and I think you'll be more successful. So anyway, thank you, Kenzie. Thank you, Robert Kiyosaki. I think that's good information. Okay. Hey, I think Frank has a poem for us. A trader's a tactician. We measure twice and buy once. We work at our own pace. The discipline is key to our tradition. It is essential to our mission. You know, we kind of work on commission. Let me try that one more time. A trader's a tactician. We measure twice and buy once. We work at our own pace. Though discipline is key to our tradition, it is essential to our mission. You know, we kind of do work on commission. You are 100% right, Frank. Thank you, sir. I appreciate that. I want to post that later on Twitter if you don't mind. People really like Frank's poems and Joe's poems, and I love them. Christopher, success is never bought. It's only rented, and the rent is due every month. This is true. Kamal says, Roku, how does it test on the 520 crossover? Let me see if that is available. Let me take a look here. Roku. And let's do the 520 Okay. You know what, Kamal, unfortunately on ETF replay, that Roku is not available for the back test. Sorry about that. Yeah. Sometimes they don't have every single stock, unfortunately. Um, I don't know. Maybe Steve has TrendSpider. Maybe he could test it if he's listening or around. But yeah, unfortunately, Kamal, I can't see it. So, okay. Well, let's get to it. Let's go down through the list here, see if there's anything good. Before we do, always want to remind myself and everyone to choose wisely today before taking any trade. Choose wisely. Do you have good indicators lining up? Do you have a good combination of indicators? Right? Have you looked at your charts on multiple time frames? Right? It's important to look at charts on multiple time frames, not to just see what the daily's doing, but to see what the weekly is doing as well. Are you looking at risk to reward? Are you factoring that in, right? You want to make sure that you can have at least a 2-to-1 risk to reward to the upside compared to what you're losing. And number three, again, keep in mind your correlation, keep in mind your account heat. So that encompasses everything about choosing wisely. So choose wisely today, Greg. Choose wisely today, everyone else out there, if you are placing a trade. Steve says Roku 520 EMA backtest is 444.88% on TrendSpider. Nice. Yep. There you go. You do have the 520 crossover right there. Let's take a look at the weekly. Weekly not too shabby either. Yeah, that looks pretty good right there. It's over the 1 ATR channel, not up to the second ATR channel, so maybe has some room there. MACD's positive over the 50 RSI. Yep. Okay, Zach says, Greg, Steve, would you mind explaining what that 444.8% tells you? Well, Zach, that's telling you using the 520 EMA crossover of staying in it when the 5 is over the 20, getting out of the position when the 5 is under the 20. What that back test is telling you that following that approach, it returned 444.8%. Yep, that's what Steve said right there too. So, all right, well, let's get started. We've got time. So Apple, nothing for me on Apple. Like I say, I already have the calls on Apple, so really no reason for me to add to this. And the back test, or the 520 crossover, was back here when it happened. So I'm really not going to get in late to this. So I don't see anything on Apple. It is above the 1 ATR channel. I'd like to see this move back into the value zone. We're above the value zone now. I'd like to see it move back into the value zone, move sideways, look for a V1, V2 entry. Adobe's down a little bit today. It's in the value zone. It's just moving sidewards. I don't think the 520 EMA crossover works very well, if I remember from memory. So I don't see anything on Adobe. Amazon's just cranking. Holy smokes. Unbelievable. And it got above the third ATR channel, which is pretty important. That's really strong when you can get above the third ATR channel. If you can close above, I don't know if it's going to close above, but looks likely for sure. So anyway, nothing I can do here currently with Amazon. Boeing just kind of moving sideways here. We closed below the 1 ATR channel. We rallied back in. If I could get a day or two back down in a higher low V1, I would take it. Berkshire Hathaway, V2 to the downside after rejecting the 50 EMA. Not going to short that. But what I would look for, again, we closed in the above the 1 ATR channel. I look for a close back into the value zone, sideways movement, V1, V2. Beyond Meat, looks like it has a 520 crossover. I did try to back test that on ETF replay, but it was it was also a stock that was not available to test. But honestly, I couldn't take it anyway because it's at that second ATR channel. It's a little too high for me to buy. Caterpillar, really strong move, down 8% today. Wow. Back into the value zone. I just like to see it come into the value zone, hang out, stop going down, move sideways, look for a V1 or a V2. So that would be a return to value trade. Carnival, down 8.6% today. Boy, that's a big move. You know, I talked about using the ATR formula as far as position sizing, and this is a good example. You know, most of the time I use a 5% position size for my stops. Well, that's fine if the average daily move on a stock is 1 or 2 or 3%, right? Because you want to place your emergency stop outside of noise. You don't want to place it somewhere that it would be hit. But on Carnival, if I were to use a 5% position, 5% stop, it's hardly anything, right? You can see the average range is from here to here, from here to here. This is way inside of average range. So in this particular case, what I would do is I would take the maximum that I would lose on any one trade, right? You know, if I take a 10% position size and I have a 5% emergency stop, that's a 0.5% of my total capital that I'm risking on this trade. So, and again, you can watch the video. I put the link there in the chat. It's also on my YouTube channel. But in a case like this, where the volatility is so high and a 5% emergency stop would not cover, would be less than the average range. If it would just be noise, I'd have to use a different approach. So what I would do is I would take, you know, let's say I have $100,000. Let's say I'm going to risk a 0.5% of my total capital. Well, that'd be $500, right? So what I would do is I take $500, I would divide into it the reading of a 2 ATR, because 2 ATR is outside of noise. 1 ATR is noise, so I would use a 2 ATR, and that would tell me how many shares I would buy. As volatility expands, this number is going to get larger, and your share position is going to be smaller. As it starts to contract, this number is going to get smaller and your position size will be larger. So I know that's kind of a quick explanation, but I did a video on that, tried to explain it in detail. And like I said, I put it in the chat and it's also on my YouTube channel. All right. Dow. Don't see anything on the Dow at the moment. Walt Disney. Don't see anything there. It did close above the 1 ATR channel. Like to see that pull back into the value zone. Like to see that move sideways and look for a V1, V2. So basically a mean reversion. It's moved up. I'd like to see a mean reversion back. Etsy, man, very strong. Rejected that 100-day. Just too strong for me, waiting for a pullback. I just can't chase up at these levels. Facebook down a little bit today, had a nice move up, just looking for a pullback into the value, V1, V2. Gold got pretty close to that second profit target, probably missed it by 15 cents or so, but that's okay. We're at a 65.17 RSI. I'll be looking for a rejection of the 70 RSI to take profits on this trade, but glad that I locked in that profit target there today. Google, talked about Google. I took that with the 520 crossover, slightly underwater at the moment, but has come off of its lows quite a bit. So grateful for that. Goldman Sachs down a little bit here. I would need to wait for a pullback into the value zone. Looks like we have earnings coming up here, so probably I'm not going to be able to get in this trade anytime soon. Home Depot down just a touch today. Return to value is the next trade, next possible trade for Home Depot. Back in the value zone, sideways movement, V1, V2. IBB, we already talked about that. Steve had the nice 530 crossover that went positive today, so congratulations, bud. But I don't see anything there. Intel, just kind of been range bound here. Look for a return to value. IWM down today. Moves strongly above the 1 ATR channel. Again, looking for a return to value, sideways movement, Look for a false breakout to the downside and reversal back up, or in other words, a V1 or a V2. Hey, Quad Racer is here. Good to see you. Hope you're having a good day as well. Thank you for coming. Johnson & Johnson down a bit today. Again, looking for a pullback into the value zone. CarMax down 6.14% today. V2 to the downside, if you can see. Here's day one. Day two thoroughly washes out day one. And looks like it might close below day one's close. So I'm not going to short that, but just looking for a pullback into value, sideways movement. Coca-Cola, similar, back into the value zone, sideways movement. Lockheed Martin just kind of moving sideways there. A lot of these stocks are going to be the same. Just, you know, we had a huge run up here. Just looking for a pullback, looking for a reversion back to the mean, sideways movement, consolidation, find that there's support, and then look for a trigger, which would be my V1 or V2. MasterCard down 2.5% today, but getting close to getting back into the value zone. I want to buy MasterCard if it gets back down in here. Mickey D's, same formula. Sound like a broken record here, but same formula. Just looking for a pullback into the value zone. Merck, boy, did not like that 200-day. That 200-day really acted as resistance, so nothing on Merck here. Again, pull back into the value zone. You know, here's the bottom of the move. Here's the top of the move. Right about here would be 50% retracement, 50% Fibonacci number, and it would be smack back down in the value zone. So somewhere right in here, I think, would be a pretty decent place to pick up Merck in big picture, but still I would need the trigger to get into Merck. Microsoft down a bit, moved up strongly, it's just basically moved sideways for the last 3 days. Look for a pullback into value. Rejection of the 200-day at the same time it would be in value would be really pretty decent setup. So not there. Netflix is up big today. I know that. Look at that, up 7.2%. Boy, we moved sideways. We just consolidated, just had price discovery, and for whatever reason today, boom. You know, this is a good time to explain again. Sideways movement eventually leads to big moves, either to the upside or to the downside. We just don't know in which direction, and we don't know when they're going to happen. But almost always, small bars lead to big bars. Big bars, either to the upside or downside, lead back to small bars, and then small bars lead to big bars. Nike, don't see anything here other than a return to value. Philip Morris down a little bit, looking for a return to value. PayPal had a rejection of the 200-day moving average on Thursday, was down much lower earlier, had a nice comeback. Kamal says, I bought Roku and sold 96 calls for this week for $3. Wow. Stop close below 5.20. Yeah, I am going to look at Roku because let me put that on there so I don't forget. Okay. Q's course. Steve had the nice 520 crossover here. What are we at? A 55.82. So pretty good still. RSI still not overextended. Looks like we're had 3 days close over the 200. So that is good as well. Silver up just a touch. Interesting, right? Here's silver. It's up. But if we go over to AGQ, which is the double leverage, it's down a little bit. So sometimes that happens. Sometimes one of them is up and the other is down, and vice versa. But I don't see anything here on silver. S&P had that little loss overnight, but I will be buying this again today. Teladoc having a big day up 6%. Came back into the value zone. Boy, this was we had a V2 on Thursday. Day 1, day 2, day 3. Day 2 washed out day 1, day 3 closed above day 1's close. So this is a V2 in the value zone. Unfortunately, I remember looking at this, but we just didn't have any sideways movement. And sometimes, it gets frustrating because you have a setup, you have a trade plan, you need to have your requirements before taking the trade. And I definitely saw this trade, but I didn't take it because it didn't fulfill all the qualifications that I had for my trade. And I've mentioned this before, but you have the regret of following your plan, and you have a regret of not following your plan. Sometimes, like on this trade, I didn't take it because it didn't quite fit my plan. Other times you'll take something that doesn't quite fit your plan, it will go down. Then you have the regret of breaking your rules. So, that's the thing with trading. You're going to have frustrations with following your rules and breaking your rules. Bonds, boy, a lot of consolidation here, just like I was talking about on Netflix. This sideways movement is winding up. It's like winding up a watch. This will break one way or the other. Just don't know which way it's going to go and when. But, did close above the 1 ATR channel, back in the value zone, really sideways good movement. So if I could get a break to the downside and reversal back up with the V1, after this nice sideways movement, that would be a really good setup, but nothing today. Tesla up 12%. Boy, look at this, right up to the 50-day moving average. I would suspect it probably would run into some resistance there, and I guess it kind of has already, but nothing on Tesla. Twitter poked its head above the 1 ATR channel, back in the value zone, sideways motion. United Continental. No, I don't see anything there. If we could come down another day or two, get a higher low V1, that's what I would be looking for. UNG, we were above the 1 ATR channel. We have poked our head back into the value zone. We basically have 1 day of sideways movement. So in order for me to get interested in UNG, I'd have to have another day of sideways movement in V1, V2. UNH holding above the 200, so that's a good sign. USO, boy, oil was up huge last night, and then went down huge, and then it was up huge, and then down huge. So anyway, we had some of the OPEC cuts, or some of the international cuts on oil, but market's not impressed either way, one way or the other. It's down 2 cents today. VIX, of course, VIX was huge, went up. We came back into the value zone. Now we're down below it, but we have this sideways motion, right? So I imagine VIX will make its move here, either to the upside or the downside at some point. Just don't know which way. I guess once the market figures it out, it will show its hand. Walgreens closed under the 1 ATR channel, back into the value zone, looking for a higher low V1 or V2. Walmart, strong day today, but nothing I can do with that. Energy down a bit today. Let's take a look here. Financials down today. Real estate had a big strong move here, looking for a pullback into value. XLU, which is utilities, did reject that 200-day moving average pretty substantially. XLV looks like it might close above the 200. And Zoom. Well, so Zoom came down into the value zone, just kind of moved sideways. No legitimate V1, V2. Does have a 520 crossover. I don't know how that back test. It's not available on ETF replay, but big strong day there as well. So yeah, the market has, okay, so we're only down 275 at the moment. So it's recovered more than half. NASDAQ did go positive. Bing He is here. Good to see you, Bing He. Always a privilege to have you here, my friend. And nice job on your Clorox trade. Bing He says FDS and FLO. All right. FDS 1050 EMA, so the 10 is 264.93, so the 10 has crossed above. Let me check. I don't know if FDS is available on ETF replay. Let's take a look. Yep, that one's not available, being he, so I can't back test it. You know, the 1050 EMA is generally I think it's one of the most solid crossovers for most stocks, not all of them, but I think that back tests the best as far as an average goes. But looks like we do have the crossover. Looks like it's above the 200-day. You know, I can't buy above the second ATR channel. Let's take a look at the weekly. Weekly's in the value zone here. So anyway, I wish I could do that back test and give you a little bit more information, Bing He. FLO. $21.58, $21.56. Yes. Let's look at the weekly. Yeah, right there in the middle of everything, isn't it? So Flower Foods. Let me see if I can back test that one. Shoot, that one's not available either, Bing He. Sorry about that. Okay. Hey, Jesse is here. Good to see you, bud. Long time no see. Nice to have you back. I know Jesse's been super busy with his job. I hope you're staying safe out there, Jess. But really great to see you. Thanks for stopping in. And he said Happy Easter to everybody. Steve Burns says ZM backtest 80.7 on the 520-day EMA. Doesn't beat buy and hold since IPO. So it sounds like not so great on ZM. Glenn, hey Glenn, good to see you. Hi Greg, small caps are down nearly 3%. Warning of a leg down. Possibly, we never know, do we? We just never know. But Glenn's been pretty accurate with some of his calls, that's for sure. All right, well, geez, I really don't see anything for today except possibly Roku with the 520 crossover. And you know what? Let's take a look here. So I'm just kind of doing my risk to reward here. So from here down to here is about 7% to the downside. From here up to the 50 is about 7 as well. Yeah, I think I'm gonna have to pass on that. I mean, it does back test well, but you know, looking at my risk to reward, it's always a big thing for me. And sometimes I miss trades because of it, but other times I'm really glad I didn't take it. But I mean, I think this looks fine. I think it looks fine. I just am looking at the risk from here down under the 20 compared to here up to the 50. And just for me, it just doesn't look like it's 2-to-1 for me. Hey, Google went positive. That's good, finally. So things are looking pretty good here. The Apple calls doing really great. Gold with the 520 crossover is doing really great. Google finally went positive, so that's good. SPY had the overnight SPY trade, which was a little loss. So okay, let's take a look quickly over here at Steve's trades. So doing nicely with the 520 crossover on the Qs. Alibaba strong with the 520 crossover. IBB, which is the 530 crossover. That's been a great trade, Steve. AGQ. AGQ's been a really good trade. I lost my reference points here, but that was a 520. So that one has made back a lot, down slightly, but up nicely off the bottom. Oh, it was over here. Monster 520 crossover, just didn't like that 200-day moving average, and so that's down at just a smidge. Amazon 550, huge day up here, just huge. I couldn't take this particular trade because, see, it triggered when it was a second ATR channel. In this case, it just didn't care. It just didn't care. But similar to Roku, when I'm looking at my risk to reward, I thought, well, my risk is from here to here. My reward is from here, maybe up to the third ATR channel. So that's why I had to pass on the trade. But this was an explosive, huge day today. So congratulations on that, Steve. And then last but not least, Goldman Sachs. So down a touch today, but still profitable. So congratulations, Steve, and congratulations, Bing He, on your Clorox trade. This one's been kind of a sleeper, but it's been a sleeper just with an upward drift. So you're up nicely on that. Glad to see that. Steve Bird says, Steve exited Amazon for a 6.52% gain near the third deviation upper Keltner channel. Not much reward left here. Okay, that makes sense. Steve got out while the getting was good. I think that's a really good idea. Yep, it is the third ATR channel. It's getting close to the 70 RSI, so you have that confluence of two rejection points up there. Third ATR channel, we know that 92% of prices tend to fail at the third ATR channel, and you have that confluence of the third ATR channel as well. So I think that's an excellent move, Steve. Congratulations. So I will take that one off of the board. Okay. Okie doke. Okay, that makes sense. So, yeah, I really don't see anything here. The market has been going up, but as a trader, you really have to have the courage or the discipline just to stand aside when things start getting a little overextended. I just don't like to chase things. As I've mentioned many times, I like to wait and see the price come back to where I want it to be. It's like, Warren Buffett has, one of his policies is he never bids out. He never gets into a bidding war on buying a stock. Or buying a company. He waits for a deal to come along where he doesn't have to bid and he gets it at the price that he wants. And that's what I want to do, right? I set my parameters of what I feel like is too high or too low, and I just wait for a move back to where I feel good about it. And some of these right here, yes, they're going up, but they're getting near the second, third ATR channels on some of these, so I'm just going to have to let it pass. Remember, there's three positions. There's long, there's short, and there's being flat, and right now, kind of flat as far as new positions. But the current position's doing well. Oh, really glad to see Google finally up in the profit now. So again, real quick, Apple, long-term calls on this. This has moved up really, really well. Gold off its high today, but one profit target. Google like a champion now. I like this higher low V1 now. SPY, small overnight loss. I'll be taking this again today. And then Roku. All right. Is anybody else looking at anything else today? Anything interesting? So we took Amazon off for Steve. I think that was a good move. Who knows? It might go roaring up again tomorrow, but we don't know. Frank says stocks come home when they're hungry. 100%. 100%, Frank. That's a really, really good point. Stocks come home when they're hungry. And what that means to me is coming back into the value zone at the very least. You know, anything over the value zone, when I studied with Dr. Alexander Elder, it's like, you know, anything over here, I considered over value. I want to buy in value or below value. I don't want to buy over value. So that's basically what Frank's saying. Stocks come home when they're hungry. Being I queued ZM at 125.60 at market open, but just missed it. It went to a low. Oh no. Being he had a limit order in at 125.60 and it got to 125.60.035. Ah, Bing he, that's brutal. That's brutal. Oh, well, what do you do? Mount Doji says, no new positions for me. Hey, Steve says, I bought Roku on the 520 crossover. All right, well, let's take a look. Yep, 520 crossover. So anyway, I'm just going to have to pass, unfortunately. Just like I say, the way I look at the market here is that the risk from here to here compared to here doesn't make as much sense for me. But Steve's been on a nice winning streak, so I would not be surprised if that goes up. Let's look at the weekly. Weekly's not too bad. I mean, we still have the 10-week moving average above us. We have the -1 ATR channel above us, so we have a little resistance there. So let's get Steve down here for let me get this over here. So we've got Steve. This is 520 crossover, right? Let's see. 520 cross, yes. All right. So we've got a couple minutes here. So the only new position I'm taking today is just the overnight SPY trade. And with any luck, I get a little sales price on this if it comes down here at the end of the day. Let's take a quick look at the last minute of the day and see where this thing goes. Boy, about 10-12 minutes ago we had a big move down, didn't we? I didn't notice that. Look at that 1 minute bar. Wow. Okay. So I got filled on SPY at 275.66 for tomorrow. Sell that first thing tomorrow. $275.66. All right, so that's set up there tomorrow. So anyway, good day today. Only thing down was the SPY, and that was minimal, so I am grateful for that. Okay, let's take a look here. So we have Steve Burns. We have Frank. Frankie D. And we have Kamal, all on the Roku train. Okay, well, congratulations, guys, on your new position. Hope that works out well for you. But look, you know, you entered with the 520 crossover. That is a good back-tested approach, as you guys just saw the stats. Very nice. A group effort on Roku. I'm just gonna put the average here. I know. Let's see, put 9650. Well, let's put 9650 then. Okie doke. Good. Bing He says Roku has only about 12 trades on the 520 so far. Do you think it is a valid backtest? Well, the more backtest, the better. For sure. David says, Greg, thanks again for the video. I cannot ask for a better explanation. Okay, good. Good. Kamal says, glad to be in Steve Burns and at Frank's company. I agree. Listen, I'm going to talk, David, I'm going to talk a little bit more about the adjusting for volatility in just a minute. Let me just quickly do my daily plug. Just let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I really like to teach. I have a great time with my students. I do have a course. It's one-on-one, like I said, in the evening time on Skype. It's 5 sessions. Each session is somewhere between 2 and 3 hours. And in this course, you know, I teach you everything I've learned over the last 24 years as a full-time stock trader. Teach everything I've learned from my teachers and mentors and coaches like Stephen Burns and Dr. Alexander Elder and Larry Williams and Carrie Lavorne. But I think it's a great course. I think it's worth every penny. It is $1,000. I know it sounds like a lot, but I think for the money, it really is worth every penny. And I think one of the main reasons is that, you know, during the course, the first half of the course, I teach what I'm teaching you on that particular day, right? But the second half of that session, I have you teach it back to me. We do lots of chart study. I have you break down the chart. That way I really know and can understand that you're, let me put it this way. I know that you've learned what I've taught you when you have to break it down and teach it back to me, and I can pepper you with questions and you can answer them, right? What's the setup? What's your next setup? What's the risk to reward? Is it good? Is it valid? Does it make sense? What's your correlation? All that kind of stuff. You know, we talk about trader psychology, but you know, it's a pretty intensive course. If you're interested, I usually like to start out with just a free Skype call with a potential student, and just like to learn more about their trading and their results and their challenges and their goals. And then it's a good time for you to ask me any questions about the course and so forth. But the Skype call is totally free and there's no obligation. And I promise there's no pressure on my end. I just really want to work with students that are motivated and really, really want to do it. So anyway, if you're interested in setting up that Skype call with me, just send me an email. My email's in the description of this video. And then you can also send me a message on Twitter. And we'll set up the Skype call and it will be fun to talk to you and put a face with the name. So let me quickly talk about adjusting for volatility. So again, you know, when you have an emergency stop, you want to place that stop outside of noise, outside of the average, right? So generally on a lot of stocks, on a lot of major stocks like Apple or you know, Amazon, something like that, usually a 5% stop covers most things, right? But when prices get so volatile and the ranges pick up so much here on Carnival, if I use the 5% stop, look, that's just from here to here, that's like a quarter of what an ATR is. So it really doesn't make any sense for me to use a 5% stop. It may not even make sense on this particular stock to use a 10% position size. So let me show you something. So let's say I have $100,000, right? $100,000. And I'm going to use a 10% position size. So that's $10,000. Well, $10,000 divided by 11.48, it would have me buy 871 shares, right? And then I'd use a 5% position size. Well, this thing moves. Its average range right now, let's see, is 285. Its average day range over the last 20 days is 15%. So a 5% stop doesn't make any sense, right? So in the first example with the 10,000, having a $100,000 account using a 10% position size is $10,000. Dividing $11.48 into it would tell me to buy 871 shares, right? It's way too many shares based upon the volatility. So if I'm going to lose $500, right? If I'm going to, my maximum loss is $500. $500 divided by the reading of the 2 ATRs, 570. It would only have me buy 87 shares. But see, that really is a more valid amount of shares to buy based upon the volatility. That means if my 87 shares move $5.70, I'll lose $500, right? But if I'm buying 871 shares based upon the average range of the day, I might lose $1,600, right? Because volatility is 3 or 4 or 5 times higher. So anyway, it's a good approach, especially when volatility has increased, to divide your maximum loss by what the reading is for the 2 ATRs, and it will always adjust nicely with what the volatility is. And when volatility goes down, then the 2 ATR number will go down and your position size will get higher. So I think it's a real good black and white, by the numbers, fluid way to position size based on volatility. And like I said, I placed the link in the live stream here up higher in the chat, and you can also go to my video on my YouTube channel, and it's one of the more recent ones. Quad says, thumbs up as always. Oh, thank you, Quad. I appreciate that. And yeah, if you haven't hit the thumbs up button, I mean, if you found today's podcast valuable or helpful, I really would appreciate it if you could hit the thumbs up button. That'd be nice. But thanks for the reminder there, Quad Racer. Kamal says, Greg, what do you think of buying QQQ over the 200-day SMA? It has the 520 crossover a few days ago. Well, let's take a look. Well, let's look at the back test so we can see exactly what we're looking at. All right, so this is etfreeplay.com. I'm using it by permission, YouTube. So buying the Qs when it crosses over the 200-day, staying in it above the 200, getting out when it crosses under. You can see it back test 143.2 compared to buy and hold of 171. Has a drawdown of 43.6% compared to buying and hold, the drawdown of 83. So about only half the drawdown with more than half the gain. So, just from a mechanical standpoint, this does work out pretty well. Low winning percentage, 17.9%, but the wins are very big and the losses are very small. You can see back here, boy, you can go through a string of losses, huh? Look at this. That would get frustrating, right? But you notice the losses are 1.3, 1.36%, 2% loss, less than 1%, 2.7, less than 1%, 2%, 2%, 3.6, right? Then you have a monster of a 30.18. You have a monster of a 18.6. So that's the, that's the whole method behind this. So, but on to your question. Well, Kamal, you know me. I get concerned about buying anything that is over the second ATR channel. It's just a rule that I have. Sometimes it works really well for me. Sometimes I miss a trade. But that's fine because they average out. But I would look at this. I mean, if you're in it already, it's one thing, right? If you have profit in it, that's different. But here we have the 50-day moving average above us. If you just wanted to go ahead and trade it mechanically over the 200-day, the back test says over time it's a good approach. But having the 520 crossover in addition to this, that's pretty good. It's pretty good. But me personally, over here at the second ATR channel, I would not take the trade. But it doesn't mean it's not going to go up, and it doesn't mean that it wouldn't be a good trade for somebody. But that's just my filters and my limitations on that trade. Frank says, found your video yesterday in my Easter basket. Loved it. Hey. I'm glad to know that the video showed up in your Easter basket, Frank. But yeah, I'm glad you liked the video because, for so many years using a 5% or a 10% maximum loss, as an emergency stops, it's fine, especially on the kind of stocks I trade, like Apple or Google. But with this added volatility that we've had recently, you really have to adjust. I mean, I've adjusted just by saying, okay, it's under the 200-day. I'm taking half position. Oh, volatility's higher. I'm going to take a quarter position. And it works out pretty close to what just taking your maximum loss and dividing the value of the two ATR in there. It works out pretty close. But I wanted something very solid, just paint by numbers that was not subjective. David says, Greg, what period do you use for the ATR? 20. I use the 20. 20 period. Kamal says, thank you, Greg, for the analysis on the cues. You're welcome, sir. You are certainly welcome. All right. Well, it's a beautiful day here in Utah. Looks super warm, but I went outside and it was pretty cold. So I'm going to have to gear up before I head out, but that'll be nice. Bing He says, Greg, ETF replay is based on exit if the faster MA crosses below the slower MA. You have changed your strategy to exit also if price closes below both MAs. Do you still think valid to use ETF replay? Yeah, for sure. Yeah, I do, because it gives you big picture. It gives you big picture approach. Those are just little adjustments, Bing He, that I've made. This is something I've worked on for a couple of years, showing that, if you exit when the price crosses below both moving averages that cross over, a lot of times you get out with a lot less loss than you would if you held on. But then other times, you lose out on profits if it swings back up. So I like to use ETF replay as just kind of a standard, just to get a good idea of how it does back test over time. But then I add my two approaches on there, which is half when the price crosses below. Well, let's look at gold, right? It's a perfect example. Here's the crossover. Then the price closes below both the 5 and the 20. I still think that's a good idea to get out there because sometimes it's a harbinger of things to come. But to kind of play the other side too, I want to give it a little breathing room as well. And so the second half, I waited for the cross to close back, the 5 to close back under the 20, And in this particular case, it moved up. So you know me, when I'm torn on something, whether to get into something or get out of something, if I'm really torn on it, I like my 50-50 approach, right? I get out of half if I'm not quite sure if I want to get in or get out, or if I'm not sure if I want to get in, I get in half. Because either way, you know, if it goes up and you got out, you're still glad you have half. If it goes down and you got out of half, you're still glad that you sold half. So you kind of win either way. Miko says, thanks, Greg. Enjoy the rest of your day. You too, sir. Appreciate it. Looking forward to our lesson on Thursday. Sorry. On Thursday. All right, everybody. Well, listen, thank you for coming by today. I really appreciate it. Please remember to try to go out and do something nice for somebody today, you know, under the present circumstances. Maybe you could just give them a call, check in on them, see how they're doing, let them know you're thinking about them, see if they need anything. And I think you could really make somebody's day by doing that. And so yeah, that's it. I appreciate coming. I would appreciate if you hit the thumbs up button if you found it helpful today. And I think that is about it. So unless somebody has any other questions, let me know. I'm happy to answer. Otherwise, I'm going to get out of here and go for a nice little hike. All right. Okay, everybody, have a good rest of your day. Go out, be good, and hopefully we will see you tomorrow during the last hour of the trading day. Take care. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.